Yo, what is good, guys? Back again with another episode, day 25 of the series. And yes, you've been waiting for quite some time, but today we are doing the trading strategy, part 1. So, this strategy I have used on multiple pairs. It worked very well with GU, GBP GBP JPY, gold, yeah, and I found very high success within the strategy. It is a smart money concept, as you have probably gathered. None of that trend line, supply and demand crap. But yeah, we'll be getting into it. So, within our trading strategy, we will be utilizing high time frames for daily bias, and we will be using so let's bracket that as the 4 hour, 4 hour, oh my, and 1 hour, either or. Within this daily bias, we will be finding high time frame liquidity sweeps and equilibrium. Okay, simple. 4 hour, 1 hour, that gives us our bias. Okay, not the 5 minute, because higher time frame equals higher power. We're looking long term, just like our visions. We don't want to catch no small diddy move. We want to catch big leg. And then from there, scale into 15 minute or 5 minute. Scale to 15 minute or 5 minute for a break of structure or inverse fair value gap. Okay, simple. When I say liquidity sweep, right, when we say a liquidity sweep at the highs, we should be looking for shorts. Vice versa, liquidity sweep on the lows, we should be looking for longs. Okay, once we have scaled into the 15 minute or 5 minute, we will be using, so we've got one confluence, liquidity sweep, got a breaker structure, second confluence. Lastly, use, oh wait, 5 minute or 1 minute retrace confluence. Okay, whether that be our fair value gap or our order blocks or equilibrium. Yeah. Okay. And then from there, we will be entering that's just BJ, no bro. Entering our trade. Entering our trade and setting stop loss and take profit at draws of liquidity we could do. I used to have high time frames, but 5 minute or at 15-minute time frame. Yeah, pretty simple, I say. Nothing too complicated. We obviously want to be okay, but there's an intermediate between these. Okay, making sure order flow is within bias. What I mean by that is, let's say our bias is down and we start seeing order flow in the 15 and 5 minute for buys. From there, we don't take a trade. So theoretically, if we follow this trading plan step by step, we should be profitable. Okay? With the right psychology and trusting this plan, step by step, should be profitable. And this is a strategy I've been using. It works very well. But I'm going to show you 2 examples of the strategy. I'll show you 3 examples, okay? But from there, I want you guys to test out the strategy, back testing it on charts, like just normal trading view. And then from there, I want you guys to test it out on FX replays. And yeah, I want you guys to have a little play around. So, okay, with this strategy, let's find a bearish example. So we have this high, 4-hour high. Boom. Simple. Yeah. We can clearly see it swept both of these 1-hour highs. So that's a good start. Yeah. Scale down into the 15-minute, let's say. We've scaled down to the 15-minute. What do we have here? Prior to the sweep, so we swept liquidity, make a low, and here is our breaker structure. Because why is that our breaker structure? This is the most recent low, not this low. Some people do say it's that low, but hey, it's this one here, most recent low. It's down and up candle. Scale into the 5-minute, let's say. Scale into the 5-minute. Okay, got our break structure from that. And we have our FIE gap, which hasn't been hit. So, kind of annoying. But we do have another confluence. Not just that. Have equilibrium. And as we can see, we didn't respect the fair value gap, but we did respect equilibrium. So, gone into discount price. Let's say we hunt for. Hold up, this might be a little far. Let's say within that, we start hunting for a breaker structure just for extra confirmation. See that breaker structure right there? Look. Breaker structure there. Found our breaker structure. What do? We enter shorts off of the breaker structure, which is there, the next candlestick. Set high, we set our stop loss above this high or this high, you know, a little bit more room for spread. Our first take profit will be these relative equal lows here, or equilibrium. That's usually a safe take profit, that first one here, there, as we can see. And we scale into the 5 minute to find some more areas of liquidity. So within that, our areas of liquidity will be, we could use this fair value gap here, fair value gap there, start of the fair value gap, or the end of the fair value gap. We have these lows here, down and up, 5 minute low. We have this low here, I got swept, so boom, final TP. And the one thing I want you guys to kind of experience for yourself is, once you've hit TP1, let's say this is your TP1 up here, let's delete that. Let's say your TP1's at equilibrium. Once you've hit TP1 and taken some off your position, so I'll enter free trades sometimes, but usually it's 2. I used to do 1, didn't like it. 2, you split your lot sizes, but yeah, your first TP here, once that's been hit, you set your, this is how I do it, you set your stop loss to break even. So you're risk averse, you've hit TP1, secured profits, boom. Just gotta hope your last TP hits. Yeah, once you've hit TP1, you set stop loss, and we target these. And as you can see, perfectly executed. Like, this is a very good trade to take during London session. It's Tuesday, 8:30, almost 8:30. We wanted to sweep out some lows, you know what I mean? Pretty simple, right? You just got to get used to understanding what things are used for. Okay. Another example. You know what? Let's use my... Oh, I've already shown you the trade recap, actually. Okay, look. This one. We're in the 4 hour, right? Let's say we don't see anything past that. Here, we got low. What did we do? Sweep it. Literally wicked it. Not the only low we swept, we also swept this low here. Scale into the 1 hour. Okay. Something tells me, right, the fact that we retraced back into it, there's an order block. So, we swept this low, we swept that low. Okay, we're looking nice. Let's scale into the 15 minute. Barely use the 30 minute, you know. Okay, you know what? See why we swept these lows here? See the relatively equal lows right there. Very good strong draws on liquidity. I use them for take profits, and almost every time it never fails me. Okay, so we see the sweep of the lows there, and our breaker structure. So sweep, boom. No breaker structure. Oh, there's our breaker structure. Usually look for the breaker structure afterwards, but hey, there's our breaker structure. And this is where we go into our little dilemma. So we have 2 fair value gaps. This is the 15 minute. We have 2 fair value gaps right there. There's probably a break structure in the 5 minute, but hey. When price disrespects this fair value gap and inverses it, some people short off that. Why are we not shorting off that? Answer is, our daily bias is bullish. We've swept high time frame lows. Why would we want to sweep lower? We're seeing order flow for this. So either we drop the charts and we stop trading for the day. Or what it tends to do is disrespect this fair value gap, tap into this one and respect it. But I can see why some traders would have thought, okay, maybe we're going to go lower because look, it's disrespected 2 of these fair value gaps. But this is why I don't want you guys to put much emphasis on inverse fair value gaps, because it shouldn't change your bias. Also within this, what is this? Order block. Okay, order block. So what do we see it do? We see it retrace into this order block. We also see it break structure again. So potentially some traders could have entered off that. So entered off the order block, let's say. And then, yeah, this is where your stop loss usually got to put them at protected lows. But scale into the 5 minutes to get more of a story going. Just try to understand it. This is why trading views sometimes annoying, you know. Okay, 5 minute. We have broke structure to the upside. Didn't respect that fair value gap there. But, hey, whatever. We do retrace back down. That, I'm not sure. Me personally, I would have entered straight off of that breaker structure just because we're starting to move out of the order block. A very key indicator as to when you should enter off an order block is when you close past one. So in this example, right, let's say we'll understand if our order block's been respected because it'll do this. See that? You see how it's closed past the order block, whereas this has just wicked it. It'd be very smart of us to enter when there's confirmation, because this isn't confirmation. And we know we want to sweep these highs because look, 5 minute equal highs. Why wouldn't we want to sweep that? Very high probable area. So either we have our stop loss below these lows for a 20 pip stop loss. Hurts, but hey. But we can also execute like in the 1 minute, as we said. So as soon as we closed past that order block, hold up. Ah, look, I haven't got TradingView Premium. Lovely. So, okay, let's just say within this, we have some 1 minute lows. This is how I would have played it out. We have some 1 minute lows. But even then, there is no... Oh, okay. There is no low to put our stop loss. Like, you can put it below this low if you wanted to, but there's no fair value gap in there. So, maybe below this low there in the 1 minute, for example. So our first draw on liquidity would have been this. Terrible risk reward, but hey, it's guaranteed almost. And then from there we scale into the 15 minute, finding our draws on liquidity. And we would have put our first take profit would have been this high. And potentially this one, you've got loads of draws. Like look, draw liquidity there. You got the draw on liquidity there. News pushes, they are very nice draws on liquidity. That wasn't a news push though. But places like, if we check the time, 3:15, we could have been news that time. But news candles, top of the wicks are very good draws on liquidity as well. As you can see, this draw on liquidity, that draw on liquidity, this, like they eventually get hit. It's just understanding whether market conditions are right for it. Because look, this trades at 7:30. This is during Asia session, which is whack. Hey. One more example will do. You could be doing this all day, honestly. This is what I used to do in my period of time alone. Sad, I know, but hey, we're here to break the system. So I think that was a low. It's been a 1 hour. We'll find a 1 hour draw on liquidity. Okay, this was after my trade. So we see sometimes you could literally just enter off a fair value gap rather than like having a draw of liquidity all the time. Because this is how I used to sometimes do it. I used to like mark out equilibrium from down here to there, just because it would be the whole trend. But yeah. So from that fair value gap there, that liquidity sweep, see a liquidity sweep. Time is it? 7 o'clock on a Friday. Okay, London session. We see this disrespect of a fair value gap. Yep. So that's very high time frame confirmation. But we also see a 15-minute breaker structure. 15-minute breaker structure, textbook. Fair value gap, even more textbook than it gets. And we have 2 fair value gaps. This is where we use our intuition, understanding which one we decide to chase off. Like, you see, if you want to be as safe as it gets, wait till the second one, till it just taps the second one, rather than like 50% of the first fair value gap. So we see that. Get into the 5-minute. And yeah, that would have been okay. We do sweep out this low. We also inverse again. Like, this is another inversion. Okay, we've seen a 15-minute breaker structure. I used to enter, there's so many entries, like you could enter your longs as soon as you enter 50%, you have your stops below this fair value gap, targeting previous areas of liquidity. Boom. Boom. In that. We can go even higher time frame. Oh, look, we have here. That's probably a news push. No, apparently not. And look, we've got even more highs up here. Like, look, if we extend that out. Oh, market coincides. Like, look, see all this momentum? That's how it works. Okay? We get the bottom and try catch as much from the top. Because look, as soon as it hits that, we didn't even realize. After sweeping that high, it starts going down. We just want to find an entry within the swings, you know? And this is a very solid trade. So there's loads of entries. You could have entered off there, or you could have entered off, let's say, if you really wanted to be extra safe, the moment you inverse this fair value gap, entered off there. Stops below, just below that candlestick there. 1 to 2, simple. First TP here, there, either or. Stops, you cut them, or you set it to break even. I like cutting stops over setting them to break even, because a lot of the times you'll see yourself hitting TP1, get stopped out, and then you'll hit final TP. So cut your stop loss rather than setting it to break even early, because you'll bite yourself in the head for that. And yeah, so I've deleted the strategy by accident. Copy and paste it, scroll back, watch the strategy, or take a screenshot, write it down on your notes, do whatever. I want 10 examples of bullish trades. So you can, and using two confluences. You can mix up the confluences, but liquidity sweep, breaker structure, they are mandatory. Yeah, and then you've got to add your fair value gap, or you can add equilibrium, or you can add order block, whatever. And then 10 examples of bearish trades using two confluences. Okay, that's your homework. That should take you some time. Sorry it's been a long one, but hey, we must for this, just because this is the trading strategy. So hope you guys understand that. Catch you guys on the next one, where we will be getting into one more psychology video, I think, and the second trading strategy. But I don't think you guys got to worry about the second trading strategy unless you are confident with two pairs and have learnt SMT ski. So catch you guys on the next one. Take care of yourselves. And yeah.